Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. And folks, good morning. I'm just thinking, how do you even start a day like this, right?
Yeah.
By wearing a shade of green as bright as that.
That could be the only green. That could be the only green you see on the screen today. But I think the consensus is calling for a Black Monday. So let's see whether or not we do get that. But, you know, all of the last 48 hours, everyone's been telling you about those Black Mondays in the past and how we're bracing for one. Maybe the street doesn't oblige, but let's see. That's just hope talking.
I think you guys have seen that movie, Margin Call?
Absolutely, absolutely.
So there's one, the one scene where, what's the name of the guy? The guy who runs the trading floor. He assembles all the traders in the dealing room and he says, well, I foresee significant volatility for the foreseeable future. And I think that one line, nicely summarizes how things are. And it is a significant sort of volatility, and I mean volatility all on the downside for now. So let's take it from the top. I mean, of course, I think most of us who are sort of tracking markets, commenting on it, or I mean, if you're trading and investing, you've been, of course, glued to your screen, social media, etc., and you've been sort of consuming everything which is coming on. And it's been sort of a torrent, really, in terms of opinion and views which are out there. But let's just take it from the top, the most important things, right? So we left off last Friday with these tariffs. And as we shut shop on Friday, right around that time, China imposed 34% retaliatory tariffs on US products. And as you kind of wound down a very bad session in the US, and I'll get to that in just a bit, the hope was that over the weekend you will see some, the outside hope, outside chance that you perhaps will see, the US administration and Trump, who don't seem very bothered with the US, with the market fall, perhaps after a 10% two-day decline, bothering about the fall. Well, these are the two comments which tell you otherwise. So Trump essentially posted on Saturday saying, hang tough regarding tariffs, right? This is one. And the second is US Treasury Secretary Scott Bessent, who's, one of the most respected voices in financial markets, 30-year veteran in markets. He said more than 50 countries have called the US administration for tariff talks. And he went on to add, it's not the kind of thing you can negotiate away in days or weeks. So the import of this is very clear. They are not backing down. And I put this piece out on the wall as well on Thursday. This is right after the announcement of tariffs Liberation Day, that they're not looking for quick or easy wins. These comments kind of suggest that that is very much the case. Now, very quickly, that's the quote as far as Bessent is concerned. Very quickly, I want to take you through what happened on Friday. The S&P was down 6%. The Nasdaq was down about 6% as well. Friday was the highest volume session in the history of U.S. stock markets. And to add to everything out there, and there were a lot of people who were saying 10% in 2 days, the famous the plunge protection team, as it's called, right? They'll come in and they will start to do something and they will at least start to make noises. And one important, perhaps the most important element of that team is, of course, Powell, Fed Chair Powell, who had this to say: don't need to be in a hurry to cut rates. And I think that exacerbated the fall, especially the move in treasuries. Now, in the last 2 days, the S&P is down 11%, Nasdaq is down 12%, the Russell 2000, the small cap index in the US is down about 11% as well. These are all just stats. The US equities alone have shed about $5 trillion of market capitalization in the last week, bulk of it, all of it coming in the last two sessions. And it's very clear. Just look at WIX. WIX at 45 is not sustainable. But these are not sustainable markets. These are not normal markets. Generally, people are moving into this self-protection mode. Survive, and then, of course, we will deal with what's to come. And just for some context, right, the two-day fall in the S&P has been matched only 3 times in modern history. That is the 1987 crash, the 2008 crisis, and the COVID 2019 fall. To go back to another instance, you have to go all the way back when Germany invaded France in 1940. I hope that's where the sort of comparisons end, but that is the extent of what we've seen. Now, where do we go from here? Tariff, trade negotiations, etc., will continue. They'll continue this week. They will continue over the next many weeks as well. The more optimistic, constructive take is that they've kind of taken throw the baby out with a bathwater, like a kitchen sink approach, and from here you perhaps will see somehow a path to lower tariffs. I mean, clearly markets like this not really sustainable. It looks like uncertainty is, of course, going to be the name of the game, but the peak uncertainty in that sense, the point has been passed. So maybe we're going to plateau into ongoing uncertainty now. High uncertainty, but the peak perhaps is kind of behind us, and that is important. Just one thing, right? So far, everything we've heard from the Trump team seems to suggest that they are not backing off. But be mindful for headlines, and I said this on Thursday and on Friday on Editors Roundtable as well. We are one headline away from things starting to look, at least bottoming out kind of a formation. U.S. credibility has taken a hit, and that is going to take a long time to repair. But the point is, one headline, for example, Vietnam has offered that they're going to sort of bring tariffs down to zero against the U.S. If you see a headline from the U.S. saying that, we are ready to do the same. We are bringing down tariffs on Vietnam, and we're not going to be charging them whatever we said we will. That will be taken as a signal that, they are in this to negotiate and bring tariffs down. So it'll take one headline, possibly, and hopefully it'll come sooner than more damage has to be done, but we'll see. Just to tie in the levels here, the Nifty broke many levels, supports of 23,150, 23,130. The rising trend line, the 20-day, all of it, by the way, went on Friday. The big level on the downside, of course, is the 3rd of March low, 21,964. And that's about 1,000 points, almost exactly 1,000 points away from where we are. But the GIFT Nifty is indicating, almost that much in terms of a cut on the way up. Resistance 20 hourly, 40 hourly, but I don't think we need to worry about that now. Nifty Bank, much stronger. It's not broken any levels, key levels, or seen any big breakdowns here. We need to break above the high of 52,063 to rule out a correction. But I think here also you need to be focused on the downside, because it can't be that the Nifty Bank continues to cruise higher in oblivious fashion. So we'll see here. The big sectoral damage, and this is largely two-day done damage. IT index sold off 9%, and the metals index was down about 7.5%. GIFT Nifty gives you a quick sense of how we are likely to start. I think 890 points down is the indication. Surabhi.
Getting ready for quite a wild ride. Let's just hope that the ending is better than the beginning. And I think we'll take heart from that. There are comments coming in from Finance Ministry officials promising more support for exporters. The Finance Ministry right now seems to be maintaining a stance that India's growth projections do not need to be altered in that band of 6.3% to about 6.8%. And they're saying that they're in discussions. Commerce Ministry is in discussion with exporters, and more support will be provided if needed. Now, let's very quickly take a look at screens. And what are the screens saying? How is Asia gearing up for, hate using that quote, but quote-unquote bloodbath or crash? The Japanese market had sunk as low as 8%, the Nikkei. From there, it's recovered a little bit. It's 6% lower. But the other markets, look at Hong Kong is down 9%. Taiwan's down about 10%. Mainland Chinese markets are down about 6%. The Nikkei, like I'm saying, it's recovered from an 8% crash to about 6%. Australia was down 6% when it opened, but now it's down about 4%. So marginally better. Let's see how it goes through it. Before I go on to talk about any of the other cues, the single most important cue is the man himself, right? Donald Trump. So he's made a statement, and I wonder if this is some sign of a thaw. Could there be a thaw? Let's just listen into what the U.S. president said. This was on Sunday night. He was on board Air Force One, and he made that statement saying that he doesn't want markets to go down, but then sometimes a medicine has to be taken.
Going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger, and eventually it'll be a country like no other. It'll be the most dominant country economically in the world. I think your question is so stupid. I think it's I don't want anything to go down, but sometimes you have to take medicine to fix something.
So this is what he's been saying, hang tough, sometimes we have to make a medicine, the economy ultimately will be supercharged. This is all a series of tweets over the weekend, but what he did do, which was interesting, was that he decided to extend the deadline with TikTok. TikTok's ban was supposed to come in place. He's extended by 75 days, saying that we'll talk to China, and of course China is very upset with us because of the tariffs, but we'll see, we'll negotiate with them. So let's see what Trump says next remains, of course, the biggest cue to watch. Now, what has China done? China obviously levied 34% tariffs. Let's very quickly pull up the statement. What did the country's state commission say? They said the practice of the U.S. is not in line with international trade rules. It seriously undermines China's legitimate rights and interests and is typical unilateral bullying practice. That's how China has responded. How has Europe responded? Europe is going to go through a series of very important meetings today, and Reuters is indicating that by the end of Monday, Europe will probably come up with retaliatory tariffs, more select in nature, but to the tune of $28 billion worth of U.S. imports that are right now coming into the EU. Big talking point there is bourbon whiskey. If you start taxing bourbon whiskey at 50%, will they tax French wines, Italian wines? So that's one big talking point. What have we seen from companies? Tata Motors, for instance, halting all shipments of JLR going into the U.S. till they figure out how to navigate this situation. So that's what's going on. Let's talk about the fall now. Just very quickly, numbers. That argument of whether India has already fallen in the past and therefore we may not fall more, does that hold? These are the two-day moves on the US market, down between 9% to about 11.5%, Nasdaq being the worst hit. 2 days, US markets fell so much. India, in contrast, has fallen only 2%. Now I come to that argument. We want to believe that we've been falling since September, so it's okay. We've already seen the fall. Is that really true? Is that how you should really look at it? 6 months. Now let's look at Indian markets in the US over 6 months, and we talk about the correlations. The US is already down because of this, absolute dreadful fall in the last 2 days. Even if you look at 6-month pricing, we are down far lesser, just about 7.5%, but the S&P, the Dow, the Nasdaq, all these indices are down. Look at the Nasdaq is down 13%. So don't know if that argument holds or not. Let's quickly then come down to the immediate cues, which is flows. Flows have been negative. That hasn't changed. 3,500 crores of selling on Friday once again. Even domestic institutions were on the sell side. Remember what Nilesh said to us on this very show, that if we feel we'll find better bargains at lower prices, there's no reason to buy immediately and give an exit to FPIs. It just tells you how domestic money managers are also thinking. And finally, in the midst of all this, earnings season is starting off. We'll hear from the tech companies very, very soon. I'll just leave you with what Novama is saying. Sobering thoughts coming in. Novama is saying Q4 nifty earnings will be up only 2%, which means for the year will be up only 6%. More importantly, they're saying that consensus estimates of 13% FY26 nifty earnings growth, all of them are at risk if these headlines continue to be as they are. But let's see, like Prashant is saying, we're one headline away from a change. And Nigel, let's hope we get that soon.
Well, consensus is expecting a Black Monday, and I hope that we don't see that. But hope's not a data point, so let's get you a couple of data points then. In the last few trading sessions, equity as an asset class across the globe has got sold into, while we have seen a shift towards safer assets as well. It's not the time to be brave, but maybe it's not the time to panic as well. That should be the case as well. And just to give you a sense of, India's outperformed the last couple of trading sessions. And if you look at the volatility index, out here in India, it's up only around 8%. In the United States, that index doubled in the last week itself. And that gives you a sense of fear out there. So that's actually a positive sign. Well, if you look at the FI net short positions, the short positioning in the last week has gone up by close to around 3 times. So there are shorts in the system. This market was devoid of shorts. Now there are some shorts in the system. In percentage terms, the short positioning is at around the 71% or thereabouts. A few sessions ago, it was at around 60%. That's moved to around 71%. The clients, well, the long positioning was very, very low. It was only around 8,000 contracts. That number has moved up by around 4 times thereabouts, currently holding at around 40,000 contracts. The PCR, that's moved to the lower end of the range. A few sessions ago, it was at around that 1, more than 1. In fact, that's cooled off to around 0.74, at around 0.65 odd. Technically, you normally get a bit of a bounce. And how do you see such a big swing in the PCR ratio? Because the call writing was very, very aggressive. Between the 23,000 called, 23,200 call, more than 1.5 crore shares were added. And that's the reason why the PCR has come down. Putting in the data that we've seen, the technical levels as well as the options data, you don't want this lower level to get broken out. This is the recent low. 22,000 level becomes extremely important, and the bulls will want to defend this. Technically as well, this is a very, very crucial level. On the upside, no one's talking about it, but the crucial resistance will come in at 20 to around the 50 DMA. What's been working for us? The Nifty Bank. Just take a look at the outperformance you've seen in the last few trading sessions from the Nifty Bank itself. Because the Nifty Bank is more or less flattish in the last few sessions, while global markets have sold off, and the Nifty itself is down close to 2.5 to around 3%. So the Nifty Bank will be the one that needs to fight for the bulls from here on. I'll also keep an eye on the FMCG index, because in times of crisis, that has put up actually a relative outperformance. In this recent fall, actually it's been a relative underperformer, and Motilal Oswal has put out this note. There's a possibility that the consumption pack could be the one that outperforms. So let's see, as it's done in the past. Finally, near-term headwinds for all equity markets, India included. But can India come out stronger? I think yes. There's a hope of an FTA agreement being signed, bilateral deal as well, and retaliation to Trump's tariffs may not be the way to go about it. Secondly, the competing nations like China, they have been placed under higher tariffs in comparison to India. So that's a net benefit. Goods exports to the United States, it's sub 2% of our GDP, and services have not been tinkered with as of now. So that's another good sign. And finally, commodity prices have melted down. That's not a good sign, right, for the globe. But from an India market perspective, when you're bracing for rate cuts, it makes the RBI's job relatively easier as well. So put this together, it's going to be a tough phase for Indian equity markets, but I think we come out stronger in the longer term.
Will he walk back and retrace some of those steps? I guess that's the biggest question as we're looking at markets this morning and this week. So what's the equity call? Let's kick it off with Chetan Seth's view. He's from Nomura. He's saying U.S. stocks are approaching technically oversold levels, but valuations not yet comforting enough. Overall, he says they continue to recommend defensive positioning on Asia ex-Japan stocks unless U.S. policy course reverses. He says they are particularly cautious on Taiwan, Korea, and also China equities, given the clear escalation in U.S.-China tensions, while they consider India should be the preferred choice in the region for investors who are looking to buy the dips. That's a view coming in from Nomura.